Hello everyone. In today's class, we are going to discuss about cash flow statement. As everyone knows that finance is a lifeblood for all the business organization. That's why studying the cash flow statement is very important. The cash flow statement refers to the money that goes in and out of business. It says about the changes in cash position between the beginning and end of financial year. Under the cash flow, we can see the various sources of cash inflow and cash outflow. First, we will see what is the meaning of cash flow statement. As I already told you that cash flow statement is a statement which tells about the cash inflow and cash outflow in a particular business period. Now we will discuss about the objectives of cash flow statement. The first one, assessing the cash generation. The cash flow statement helps us to how we can generate the cash for the day-to-day business operation and how much cash we are generating and where we are using this particular amount of cash. So overall cash position can be understood by you preparing the cash flow statement. The second point is about tracking the cash utilization. As you know that if you know from which sources we will get the cash and how much cash we are going to generate, and we can study about how much amount we are going to invest in the various situations. For example, buying the asset or paying off loan. These are the various things where we will invest the cash. The third one, monitoring liquidity and solvency. What is the meaning of liquidity? The liquidity is nothing but how easily we can convert the asset into cash. So every business organization has to maintain the liquidity whenever they invest the money. How easily they can meet their short-term requirement, that is very important. For all these questions, we will be getting an answer under cash flow statement. The next one, identifying the cash flow trend. Recognizing the patterns and changes in cash flow over the time to help to plan and make better financial decision. If you know from which sources we will be getting cash and how much cash we are generating in a particular business period, we can plan how much we can invest in what source. So to take a proper decision about the investment, first we should know about the inflow of cash. The last objective is evaluating cash management practices. Assessing how well the cash is managed, including where it comes in and where it goes out, and to utilize the financial resources to the maximum extent, the cash flow statement is very important. The next one, we will see the importance of cash flow management. The first one, cash flow statement will help us for short-term planning as well as cash tracking for the management of your company. Anything you want to decide about the money, first you should know which is your sources and which is your application. If you have a knowledge about the sources of money as well as the application of money, all the decisions which you are taking with connection with the cash, everything can be done in a proper way. The next one, cash flow statement helps the company to analyze to what extent your company cash planning was successful. Without proper planning, if you do something 100%, you cannot achieve your target. That is why cash planning plays a very important role. The third important is cash flow statement helps us to manage both short-term decision as well as the long-term planning with connection with the cash. Next one, the working capital management. As you know that working capital is nothing but the capital which is required for day-to-day business transaction. How much money is needed us for completing our day-to-day transaction is very, very important. So that is why the cash flow statement will provide us how much amount we have to spend for working capital management. The last one, the cash flow statement, will help us to find out the optimum level of cash balance. So it is very important for all the business organization to balance its inflow as well as the outflow of cash. Always we have to manage our inflow should be more than the outflow. Next we will see about the accounting standard 3. Okay, as per the accounting standard 3 cash flow statement, okay, who has to prepare the cash flow statement? One question will come. So for that, the answer is the cash flow statement must be prepared by two people. The first one, enterprises whose equity or debt security are listed or going to be listed on recognized stock exchange in India. The second one, the enterprise whose turnover for the accounting period exceeds 50 crore. These two people must be prepared the cash flow statement. Next one, another important question we have to get answered, that is, what is the term cash? The first one, cash is nothing but one is the cash in hand, second one demand deposit with the banks, and the third one is a cash equivalence. What is cash equivalence? Cash equivalence is nothing but the short-term highly liquid investment that are readily convertible into accounts for cash. Next one, we will see the meaning of cash inflow and the cash outflow. So the cash inflow is the money going into business, which could be from sale, investment, or financing. The cash outflow is nothing but money which is going out of the business. For example, by purchasing of asset, by investing in others' company, by the redemption of debenture, or by various these forms, if the cash is going out of the business, that is called as a cash outflow. Next, we will see the very, very important concept, that is classification of cash flows. The classification of cash flows is having three parts. One is the operating activity, another one investing activity, and the third one financing activity. Now we will see one by one in detail. The first one, operating activities. So what is this operating activities? So the operating activities are all these things of a company which does to bring a product into a existence. Okay, nothing but in simple we can say whatever we are spending to convert the raw material into finished goods, that is called as a operating activity. Under operating activity, the cash inflow includes the cash sales, cash received from debtors, cash received from royalty, fees, as well as commission. And cash outflow, it includes cash purchase, payment to creditors, payment of wages, salary, rent, as well as the taxes. The second one, investing activity. These are the acquisition and disposal of long-term assets such as plant, machinery, furniture, land, and building. Suppose if you are purchasing any fixed asset like land, building, and furniture, that will come under the investing activity, because when you purchase a fixed asset, you are not purchasing for a short period of time. You are always purchasing for the long period of time. So anything you are investing for the longer period of time is called as investing activity. In that also two parts is there. The first part is cash inflow. So the cash inflow means what? The cash is coming into the business, correct? So for example, if you sell the fixed asset, the sale of investment, receive from interest as well as dividend. See, for example, you are invested in the business of others and you are going to get the dividend for that. So that also will come under the cash inflow. And the cash outflow, if you are taking, see for example, the purchase of fixed asset or purchase of shares and debenture. In all these activities, what will happen? The cash will be going out of the business. That is why it comes under outflow activity. And the third activity is financing activity. So the financing activity are the flow of money between a business and its creditors or owners. It focuses on how business raises capital and take care of its investors. See, for example, you are starting a company and you want the fund. So what you will do? You will go for issuing the shares to the public, correct? No. So when you issue the shares to the public, you will raise the fund. So what will happen that time? The cash will flow into the business. Okay, you are receiving the cash. So that kind of activities will come under financing activity. Again, the financing activity will be divided into two parts. One is the cash flow, another one is cash outflow. So the cash inflow means what? By issue of shares and debenture, you will get the cash, or by cash received from the loan. You are borrowing the loan. Okay, this is also one of the way how you can raise the fund. So you are borrowing the loan. So cash will comes into the business. So these all are the examples for the inflow of cash under the financial activity. What will be the outflow of cash? Opposite. See, for example, when you borrow the loan, it is a cash inflow. The same time, when you repay the loan, it is a cash outflow. Same thing, when you issue the shares, you will receive the cash. The same way, when you do the redemption of shares and debenture, it is a cash outflow. The next one, the last part of this particular concept is a format. Okay, as we already discussed, the total cash flow statement is having how many parts? Three parts. One is cash from operating activity, the second one cash from investing activity, and the third one is a cash from financing activity. First, we will see what are the items which includes under cash from operating activity. Okay, so first what you have to write, you can see on the top, first we have to write the net profit before tax. Okay, it will be given in the question. So for that, certain things you have to add. What are the things? First one, the non-cash item as well as non-operating items. These are the things you have to add. So what will come under non-cash item? For example, depreciation on fixed asset, interest on borrowing, preliminary expenses, goodwill written off, loss on sale of machinery, premium payable on redemption of preference shares or debenture. So these all are the non-cash item or non-operating item. Okay, these things you have to add back and you have to deduct the non-cash income. See, for example, interest income or dividend income, discount on redemption of preference shares and debenture, profit on sale of machinery, land, building, investment, etc. Okay, these if you are doing for the net profit, if you add non-operating expenses as well as non-cash item, and if you deduct non-cash income, you will be getting operating profit before working capital changes. So for that, what you have to do? We have to do add decreasing current asset and increasing current liability, as well as we have to deduct increasing current asset as well as decreasing current liability. Then you will be getting cash from operation. From this cash from operation, you have to deduct the income tax paid, then you will be getting net cash inflow or outflow from operating activity. How to find out whether it is inflow or outflow? It's very simple. When you do net profit, add non-operating expenses as well as non-cash item minus non-cash income, whatever you are getting, if you get the minus, then it is a net outflow of cash. If you get plus, then it is considered as net inflow of cash. Okay, the first activity is over. Now the second activity, that is investing activity. Okay, investing activity also two things will come. The first part, what you have to do is like sale of machinery, sale of land and building, sale of furniture, sale of investment, sale of goodwill, patent right, trademark. I mean, whatever the activity from which you are generating the cash, so that we have to write first. Okay, from there what you have to do, whatever you are investing, for example purchase of machinery, land and building, furniture, investment, it is nothing but cash inflow minus cash outflow, which connected with the investing activity, everything together you have to do it. Then you will get net cash flow from investing activity or cash used in investing activity. Next we will see the last part, that is cash flow from financing activity. Already I told you financing activity will be mainly concentrate on nothing but how the organization or the enterprise will raise the fund. Okay, so see for example how we will get the fund. Issue of equity shares, issue of preference shares, issue of debenture. By doing all these things, what will happen? You will get the cash. So cash inflow. Then minus redemption of debenture, redemption of preference shares, redemption of equity shares. By doing the redemption, what will happen? There will be a cash outflow. So inflow minus outflow, if you do, you will get cash from financing activity. So under A, we will get cash from operating activity. B, we will get cash from investing activity, and the C, we will get cash from financing activity. If you all together, if you add, we will get either cash inflow or cash outflow. When you are doing this, every point of view, what you have to do is we have to avoid the cash as well as the cash equivalent, because whatever we are getting by adding 3 activity, for that particular activity we have to add the cash as well as cash equivalent at the end. Okay, then you will get the cash balance at the end. The remaining things we will see in the next class. Thank you.